Welcome to the Future of Supply Chain, presented by Dynamo. Each episode, we sit down with leaders in the industry as we build the future of supply chain together. Let's get into the show. Here's our host, Santosh Sankar.
Hey, ladies and gents, welcome back to the Future of Supply Chain podcast. As you all know me, I'm Santosh Sankar, your host. And today I'm joined by Felipe Capella, co-founder and CEO of Loadsmart. Welcome, Felipe.
Thank you very much, Santosh. Pleasure to be here.
So I'm excited for this season of the Future Supply Chain because we're diving back into the brokerage and forwarding business models. And it's rather timely, some would say, given all of the headlines around Convoy and equally Flexport. Both are venture-backed unicorns, and I would say kind of in that initial class of technology and supply chain and digitization. But kind of stepping forward here, I'd love for you to just give our listeners a quick 90 seconds on Loadsmart.
Okay. So we are a freight company combining technology and transportation services to reduce a shipper's freight span, increase efficiency, and their level of service quality in general. So nowadays we have three main divisions. One of them is brokerage, right? So we help companies move their loads in an efficient way. Second one is software solutions. So we do provide SaaS solutions to shippers, carriers, and warehouses. And the third one is managed transportation, which we leverage each one of the previous two ones, like brokerage services, right, like logistics services, plus software to really allow a mid-sized shipper to outsource completely their transportation department or their transportation needs to a company like us, so they can focus on their core business. So that's who we are.
And so with that, kind of what's the Felipe Capella story? How does that intersect with the Loadsmart story?
Well, the Felipe story, I'm not sure, is very exciting. So I come originally from Brazil. That's why you see this, you hear this weird accent. I've been in the US, I think now for 14 years, and but this never goes away. And well, my background is really corporate, mergers and acquisitions in Brazil, New York, and then later on Washington D.C. But then, like almost 10 years ago, we decided to start Loadsmart, which we came with a lot of naive thoughts and a lot of new ideas as well. And we learned a lot in this past like 9 years and so, almost 10 years. And here we are today.
So that's a brief story. We're going to get into some nitty gritty details, but October 2023, it'll be kind of one of those times in the supply chain technology history book, because that's when the Convoy news really sent ripples across the industry, and I'm sure especially amongst yourself and your peers. But we're a bit removed from the event now. And I'd be curious, kind of what are the takeaways you have and your team has as you're kind of reflecting on kind of what happened to Convoy, what it meant for the industry, so on and so forth.
Yeah, maybe what I can do here, I can kind of give you a quick context around Loadsmart, so you can kind of compare our story with Convoys. Then I go back to Convoy, and then we compare kind of both of them, right?
Let's do it.
So yeah, so we started Loadsmart back in 2014, and again, my co-founder and myself both came from out of industry. So again, we came with a lot of naive thoughts and some new ideas. So, but of course, you learned a lot, right? So the first thing that we did actually in 2015 was to launch this instant pricing, instant booking for full truckload. It did not really exist in the US before, and when we launched it, people thought we were crazy because we were running the risk of the transaction, right? Like market makers. So we started to kind of deliver prices without really having a carrier price behind us. It was just based on algorithms. And people said like, well, this is never going to work. Then fast forward today, it's kind of becoming the industry norm. And we're really proud of having started that back in 2015. Then around 2020, we started to realize, and again, like some other companies, we raised money, right? And we allocated a lot of our money to R&D, right? Engineering and design and product management. And around 2020, we started to realize that investments, the R&D, large R&D investments in internal workflows and automation for brokerage were really starting to present like diminishing returns, right? There's so much you can do to automate your internal workflows, right? Sometimes you have a task that is actually a $1 task, and do you really want to throw like a highly paid engineer to automate that? Maybe it's not the best use of your engineering firepower. So we realized back then, 3 years ago, and we started to shift a lot of the R&D towards two things. First, customer facing software, right? So we said, like, you know what, why are we building all this software to ourselves? Why can't we just leverage a lot of things that we build and start offering that as a software solution for shippers? So now we have probably the largest dock appointment solution for warehouses. We have a shipper guide, which is a procurement and execution tool for shippers, running between, I don't know, 10 and $150 million of annual freight span. We have a Carry TMS, which is a trucking management tool for small and mid-sized fleets. And now we have NavTrack, which is a computer vision yard management visibility that tracks your assets in the yard using your cameras and a computer vision attack. So that, again, positioned us a bit differently, right? And on top of that, we realized, okay, now we have a software offering solution. And then we have the services solution. If you merge them both, we're in a perfect situation for managed transportation, meaning for mid-sized companies to outsource completely their transportation needs to us, right? And I think that's a great value prop and a great ROI for mid-sized companies. So again, in 2023, today, we have a company that is quite diverse in terms of revenue streams, right? In terms of margin profiles, in terms of value proposition. And then you go back to the story of Convoy. And again, just with a grain of salt, because we were kind of put in the same bucket historically by investors mostly and by the press as well. It's not that we consider ourselves exactly the same as Convoy or Uber Freight. But Convoy and Uber Freight, right? People talk a lot about Convoy, but actually Convoy and Uber Freight have a lot in common in the way that they pitched to investors and the way that they turned out, right? Back in 2017, 2018, both Convoy and Uber Freight were pitching to investors kind of a very simple pitch at the end of the day. They were saying like, hey, it is an industry ripe for disruption. Give me money, allow me to grow the business very rapidly by subsidizing a lot of times shippers, right?
Yeah.
And most often enterprise shippers, right? Which is it's an important distinction. And after I grow this very rapidly, because I'm inserting technology, which is kind of the other half of the burn, if you will, right? I'm gonna have a big volume, and I'm gonna operate with technology. Therefore, network effects, whatever that means, right? Which I think back in the days was not being heavily scrutinized, right? But network effects kick in. And I think at the end of the day, that strategy was ended up not being correct or not being a good strategy at the end of the day. And what happened? And I remember back in 2018, Uber Freight was going to the largest beverage companies in the U.S. and they were telling them, like, give me $100 million off your freight. Yeah. I'm going to operate at this rate level. And for us, we're looking at it. These guys are losing 20% gross. So they're burning $20 million in one contract. For what? And we didn't really understand because we started before these companies and we made the same calculations, right? Hey, what if we subsidize shippers because it's kind of a business model with a VC, a lot of VC, especially on the consumer-based side. And we just reached the conclusion that it was not a good strategy because Uber passenger, right? Uber rides, it could make sense for Uber ride because a local business, right? If you burn 10, 20, $30 million, you can reach 30, 40, 50% of a market share in a specific city. Then again, 30 to 50% market share, you have the supply is tied to you. You have pricing power. It maybe can elbow out your competitors. It's a different dynamic. But when you go to truckload in the US, right? Whatever, $300 billion industry. In order to reach a specific market share, you're going to have to burn like billions of dollars. No one's going to do it, right? So we never really understood if people did really the comprehensive math. But what happened at the end of the day is that Uber Freight actually realized that apparently before Convoy, and there was a corporate bailout, right? The
Yeah.
$2.2 billion corporate bailout that in which they acquired a Transplace, a very good company by the way, and that was the kind of the end story of Uber Freight. Actually, they're still burning money today,
Yep.
which is a different story, right? I think if you ask the Uber Freight board now, hey, knowing everything that you know today, would you do it again? And the answer will be 100% no,
Hell
right? Hell
yeah.
no, get me out of this business. But again, they decided to bail them out with a couple of $1 billion and see the end of it. And I think on the Convoy side, in the past couple of years specifically, we didn't see any strategic move or any acknowledgement that this investment in R&D resources to automate internal flows had a limit of upside, right? And that we did not really see meaningful unit economics impact for some of these things, and there was no strategic change, at least
Hmm.
from the outside. And when I have been talking about that for the past 2 years, when I go to events, I ask people around, hey, what's up with Convoy? Like they have to do something, right? Because
Yeah.
people gossip, right? Yeah, these guys are burning axe, right? And they're sticking to enterprise core brokerage, which has a very difficult margin profile, right? That every broker knows that, right? In order for you to move loads, we don't know, with a big enterprise retailer out there, your margins are very, very
Yep.
thin, right? So, what is the value prop there? And can you operate at a 6% margin with a bunch of engineers and a bunch of like partnership groups and marketing and that kind of cost
Right.
structure, right? So either you have to understand that core brokerage is a very lean business and you have to adapt your cost structure dramatically, or you have to understand that your core offering of enterprise brokerage does not match your cost structure. Therefore, maybe you have to
Right.
change the customer profile. You have I don't know. We have to do something on the
You either
revenue
have to
side.
get more revenue or you have to be willing to reduce the costs in a significant way. But let's spend a little more time on this because I've been ruminating on this business model that is digital freight brokerage. And you've described it effectively as, hey, kind of generally razor thin when you're focused on enterprise. That kind of limits you to how much you can really invest in your technology and your R&D. Um, but kind of that actually raises, there actually might be nuances here because if you think about a freight brokerage business, you earn revenue, net revenue, right? One, kind of VCs got too excited by gross. Gross doesn't really matter. It's the margin you charge, and call it kind of an incumbent brokerage might be able to charge 12 to 15% in a healthy environment as their net revenue. But that's kind of the limit. You have to run your whole business within kind of this limit of, hey, between 10 to 15% is what I take of my transportation spend I broker. And so, kind of, what does that mean? Like, what are the challenges ultimately with scaling a digital freight brokerage model in and of itself? Is it that they're kind of every brokerage over time will digitize or automate kind of three specific things that are really value drivers to the cost structure and nothing else? Or does there need to be another kind of revolutionary reduction in the cost of technology and processing and talent, I guess, with that in order to deliver this future that maybe was promised?
I think first, again, people have to recognize that brokerage again is a very lean business model, and the companies that are successful, they are very good operators. So it's not this concept that you're getting into a market that they don't know what they're doing, that they
Yeah.
have no idea. That's absolutely not true. These guys are operationally, they're machines, because they're used to operate out of a very thin margin. I remember when we were looking at certain companies, 2 years ago, I was actually impressed by the level of the support teams of a specific broker. Right? They had like the, I don't know, 300 people, 200, 300 people, and like 3 people in HR too, right? So it's a lean business, and these guys are good operators. So I think that's something that has to be understood. It's not that there's a lot of fat or because they don't know what they're doing. Actually, is the opposite.
Right.
And second, I think also investors historically never really understood the concept of brokerage. They always thought brokerage was a matchmaking game, and 80% was matchmaking with a specific carrier. And that's also not true. Finding the right carrier is an important part of the puzzle, absolutely. But the reason why a shipper hires a broker is not because they have no idea about finding a specific carrier to move their load. It's not really that you have within the concept of brokerage, you have 10 or 15 different levels of service, right? Because again, no one uses technology, so you have to do a lot of things manually. So instead of the shipper doing everything manually themselves and dedicating a lot of time, they say, you know what, I'm going to have issues kind of collecting documents. I'm going to have issues finding out the right account to pay this carrier, and then I'm going to have to transfer money, and then it's going to reach the wrong account. It's a whole mess, right? That I think people fail to understand. And I think that only as we evolve and as more companies adopt cloud-based solutions, both on the shipper side, but more importantly on the carrier side, because on the shipper side, I think things are advancing. Then you can do things a bit more in a more automated way, and you can eliminate some of these manual tasks via APIs and so forth and so on. And I think what's going to happen is that the overall margin profile will decrease, because as these things become more API driven, you can be more aggressive,
Yeah.
right? And the companies that are
You can
able to
sustainably reduce margin.
exactly,
In other words.
exactly. But I think that's going to take time. Again, if you take a look at the carrier side, how many carriers operate their business out of a cloud-based platform? Not many, and things are changing very slowly year after year.
Mm-hmm.
On the biggest change I think that I've seen in the past 3 4 years was actually on the enterprise side. That after the big TMSs created their cloud-based version, I've seen a lot of large enterprise accounts migrating to a cloud-based TMS, and then being able to do some interesting like API quoting books, this kind of stuff. Right, and now you have the mid-sized shippers starting to adopt new cloud-based TMS solutions, where they're more nimble, that you can integrate with. So hopefully in the next 5 to 7 years, you can have, I don't know, 40 to 50% of the demand side operating in cloud-based systems. That's actually pretty interesting. Right?
Yeah.
And the question is, what is the percentage of the supply side that will operate out of a cloud-based system in the next 5 to 10 years? And then you see, and what is relevant. I think if you reach like 25%, 30% on both sides, it's going to be quite relevant. And maybe we take 4 to 5 years to get there.
Yeah. So, and I'll give kudos to our friend Hunter at LogRock for this question. But what do you think? Right, ultimately, you have done correctly. Transfix, et cetera, have done successfully to at least survive, if not succeed. That Convoy ultimately failed at, and you kind of you touched on a few things around revenue diversification, but is there anything else? Because others might have predicted differently. Because it's like Convoy might have been in they'll always be around, they'll be fine.
Yeah, yeah. I think I mentioned some of these things, right? And the problem with, in general, the problem with subsidies is that you never know if we're actually adding value to the customer, right? Because the customer is not truly paying for it, right? So you start getting into this cycle of that you think you're growing a lot and you think you're doing great, and your investors actually, right? Let's remember that back from 2017 to 2021, investors were actually cheering for that. I got calls in 2018 right? From several investors, not only ours, like, but general funds saying like, hey, have you guys seen what Uber Freight and Convoy are doing? They're growing a lot. You should do the same. And we're trying to advocate, no, but look at what they're doing. They're actually burning money. It doesn't make sense to burn money in this way. Well, everyone burns money. Growth is what matters. So it's actually, we have to understand that it was a bad incentive also from the VC community, if you will. And if you take a look at the Convoy's investor base, very San Francisco Bay
No, you're
Area
absolutely
driven,
right. You're
right?
absolutely right.
If you take a look at our investors, we talk about like Maersk, Ports America, TFI, CSX. These are hardcore logistics folks. So we didn't get that much push on that towards that path, right? But again, I think we realized earlier on there's a limit of the benefit that you get in internal brokerage automation, right? And the most difficult parts of the brokerage flow are the ones that we actually interact with the third party, and that's very difficult to automate once the third party is not really operating in the cloud. And
Yeah.
you can create whatever KPIs you want. Well, but they actually come to my website and then click on the button, and then I claim it is automated. Sure, but it's reducing. Does that impact unit economics? And I've been asking again this question for a couple of years. No one has really demonstrated a huge unit economics impact, at least on brokerage, so far, right? I think again, what the only thing that I have seen so far is actually what we did in the API quoting book. That it kind of you can remove an expensive sales cycle, a transactional sales cycle, and you can just do everything via API, right? That's relevant, but the rest of it so far we haven't seen any specific major changes in unit economics with the technology, and I think again Convoy should have realized that earlier on, right? 2022, they raised what 200 something, but truly equity or venture debt was probably 120.
Yeah.
And by then, they knew that raising that money was very tough. It was very tough, and they did it. Kudos for them. But then you have to have a plan around it. Like, hey, we have a year and a half of cash. What do we do? And I
Yeah.
think they just realized like, people are gonna keep funding us, or the market's gonna come back.
I think they were brokering at 15%. Like they started to reverse the subsidies, but it might have been that didn't cut deep enough to what you're saying on your R&D, because you have to
Nothing,
manage your R&D within the margins.
and nothing really, like, in order for you to fix your operating business. Again, brokerage is such a difficult business to operate. I mean, like, very tough margins, and you have to operate in a very lean way. But if you're too lean, your service degrades, then your customers are going to kick you out.
Circular.
So yeah, it's very tough. It's very difficult to do that in 10 months, to move from
You're right.
one
Yeah.
extreme to the other, right? This is
Yep.
more like, hey, we have to change the way we operate, and we're going to have a 24, 30-month plan, and we're going to stick to it. And maybe probably there are other things that we are unaware of, right? Here we're looking from the outside. So
yeah.
so take everything that we're saying with a grain of salt. But I haven't seen any, at least from the outside, any meaningful strategic changes in the direction that they were going, and they're just kind of walking towards the edge and kind of sleepwalking almost.
So you mentioned kind of, you have your brokerage, you have your software, and then you have managed transportation. And my understanding is you've very much kind of invested and grown around the managed transportation. Why has that been such an important focus?
First of all, I think that has been the best customer feedback that we got so far, meaning that a couple of customers called me, is like, dude, this was the best decision that we made in the past 5 years, blah, blah. I was like, wow, we're doing something right here. Actually, we had one customer that called us back and said like, hey, you guys are going to think this is weird, but we actually want to pay you guys more. And we're like, that I never heard before. There's a signal here that this business line may be working. And if you think about it, that makes a lot of sense, because if you take a look at these mid-sized shippers, right? Again, shippers that spend annually I don't know, 20 to $100 million in freight, right? So maybe they have a couple of $1 billion in GMV or revenue, and it's really worth it for you to have a big department, um, and procure software, adopt a TMS. That if you go to the larger enterprise level TMS, is going to take you a year to implement. $500,000 of upfront fees. Again, you have to recruit a team, and then you have attrition, and you have everything in your balance sheet, right?
Hmm.
Is that really worth it? Or maybe you outsource everything to a company like us that has the newest technology, right? We already come with the technology. So we already come with procurement technology, execution, tendering technology. We come actually with the fleet technologies if you have a private fleet. So we come with like plug it in, you take everything out of your balance sheet. You don't worry about transportation anymore, and we can do it much more efficiently because we have much more scale, right? We can actually cross your network through other customers that we have, so we benefit from other customers. Yeah, so we can save in between like 15, 20, sometimes even 24, 25% of the annual freight spend. So this is a great value proposition. AI can
Yeah.
save 20% in your freight spend. On the brokerage side, then you're saying what? AI can, yeah, I do it for $20 cheaper. That's your, or my service is 2% better. It's much more nuanced, right? It's more complicated. So that's why we're super excited about managed trends. And I think more and more, hopefully, people are going to realize that again, if you're running a company that has a couple of $1 billion in revenue and you're spending $50 million in freight, maybe you should not be operating your own freight, right?
Yeah.
Maybe you're better off not worrying about that and letting someone else worry about that. I think most companies make the mistake say like, no, but we have a nuance. No, but we are very unique. Maybe you're not, right?
Yeah.
Maybe you're not. So we're trying to talk a lot with CFOs about that. Hey, just run the numbers, and we can run the numbers for you. We can work together and see if we can save you money, and you can kind of put everything out of your balance sheet, right? And worry about your core business. So that's why, like, for us, it has been a great thing. We're dedicating a lot of R&D there because again, we think the value prop is very high. But also, like, our broker experience just helps us a lot with the execution of the load, right?
Mm.
So everything kind of benefits from each different division. So we're happy with this software brokerage managed trends division that we have today.
That's awesome. So as we wrap up here, I have a couple more questions, and I guess kind of with all this said, is this business model going back to freight brokerage in and of itself venture friendly, or do you need to have kind of an adjacent software effort that kind of diversifies the ups and downs and maybe some of the um, I guess challenges of the business model in and of itself, requiring a very lean operation, if you would? Is this something VC should continue to look at?
That's an interesting question. Maybe Santosh, maybe you can tell me if you think that's that's venturable. I think if you take a look at the type of companies that venture capital funds invest on, right? They're looking for either very high growth, very high margins, or just like something that could become a very large business, right? And I think it is difficult on the brokerage side for them to kind of equalize all of these things together. But again, if you fast forward, just because of timing, as most things in the startup world, if you fast forward enough in time, you're probably gonna have some platforms in which, after a substantial part of the shipper marketplace is there and a substantial part of the supply not is there, but like it's in the cloud, then you're
Yeah.
probably going to have new business models
Mm.
and new monetization structures that are pretty exciting, right? But again, it's not going to be tomorrow, and it's not going to be next year, right? This is more like a 5 to 10 year concept. Can venture capital funds invest in a 10-year horizon after the Convoy result? I think they got a little bit there's a scar there. So I think it's going to take a couple of years
Yeah.
for that to change. But we're going to be there. Maybe we're going to see the rebound of the of the of the freight tech coming in a couple of years.
Yeah. No, I think that's a very fair observation, and I certainly think that, at least in the last few weeks of speaking to people, there is a healthy chunk of the venture community who are kind of pausing, and they aren't sure whether. I think a lot of them will tell you they're not sure if they understand the business after this. That's what it's caused. So hopefully things like our conversation here helps inform that, and shines light on there is opportunity, but like most things in business, it's also a function of timing. Um, but with that, I'd love to kind of end on the note related to all these kind of brokerage trucking adjacent businesses like fuel cards. They've scored massive valuations. Is this kind of the next shoe to drop, or you think they'll get by okay?
I think before, again, if you take a look at fuel cards, tolls, even like factoring, insurance, right? These are all what I consider kind of add-ons, right? Which have to be part of a main transaction. Right? If there's no transaction, there's no add-on opportunity. And I think it is very unclear still whether you can or whether someone will be able, or a couple of companies will be able to create these platforms in which large number of transactions go through, right? So I think just kind of standalone offerings of add-ons are very difficult to work because again you have to look for a transaction, and because the industry is very fragmented, right? There are a lot of middlemen. Then you have to go after every single small middleman to try to attach your add-on. It would be much easier if you had like 5 to 10 large platforms and you have a very interesting add-on, and after you plug your solution into a large platform, you just see this kind of wave of transactions coming in. But currently, again, I don't think we have this, and I don't think we're probably going to have it in the next 1 or 2 or 3 years.
Yeah.
Right? So this will be a tough business, I think, for next 2-3 years to come. And I think it's going to be much more obvious again after larger parts of the transaction are in the cloud and part of main platforms, which I don't think it is the case today.
Well, with that, Felipe, we appreciate you jumping on, talking about the industry, the recent events, but also kind of reflecting on what it means to kind of build a business here as you're doing at Loadsmart. And with that, look forward to your continued ongoing success over there.
Thank you, Santosh. And again, take everything that I say with a grain of salt. I have a lot of emotional baggage in this past 9 years. So I just wanted to have a kind of an honest and transparent discussion with you here. But that was fun.
Thanks for watching. Follow us at dynamo.vc for all the latest episodes. We'll see you next time.